JBlog, 13th of September 2009. So I start looking out at the S&P 500. In this case, it's a 2-year chart, weekly bars. And you can see since March there's been a steady run up, little dip here, run up. We have not yet reached the descending trend line that started in October of 2007 and was touched right here, was not quite touched there. But until this point, until we reach 1200 or so, um, it's still technically a downtrend in the long picture. Of course, if we are looking at what most people are looking at, which is a 6-month chart, it looks like this, and this, of course, looks very bearish. There's no doubt about bullish. Sorry, very bullish. Must have been a Freudian slip there. And that's what most people are looking at. We did achieve higher highs once again last week. Friday was another possible topping doji here. And although we have overbought conditions, the market continues going up and up and up, and just doesn't seem to find any limits at this point. We're looking at Market Watch, and we're currently looking at the headlines. I always like reading headlines and do exactly the opposite of what the headlines tell me, especially when they get too bullish. In this particular case, Forex weighs Japanese shares. Of course, Forex must be something. It's always something that causes something. Market looks good for retail news. I like this one. Sales data boosted by drivers trading cash for clunkers will top week of positive economic reports as recovery evidence grows. Okay, so the taxpayer is financing some people's car purchases, and that is a sign of a recovery. That if you borrow money and you buy things, then that is your recovery. Good luck with that. It's not the way that I understand economics, but it seems to work for somebody. Looking at the NYMEX, at oil. Oil is down from last week. It is down to 68.36 as of 5 minutes ago. Natural gas has once again dropped below $3 at $2.96. Gold is still in the 1,000 range. And let's go over to our commodity charts. Oops, wrong chart. Not a chart, just a very inspiring music video I was watching. In any case, looking at oil, oil is having real problems penetrating the 75. Now there's some interesting news that came out on a stock which is called DXO, which was a double oil index, which has been cancelled. Deutsche Bank no longer wants to trade commodities. There's lots of overhead, lots of restrictions being put on, and they basically just decided to pull the fund and basically give the people that were in it the last price quoted. If there is more people following that example, then that should take a lot of futures traders on the positive side out of the oil market and could conceivably depress the price of oil quite a bit further. Now I'm looking at this here, not a particularly strong chart at this point, but it's also not particularly weak, so we shall see how that goes. Natural gas, quite awful, of course. I bought down here in the 250 range, just because this looked to me like a capitulation move, and it has gone up since. This is a long-term trade for me when I'm looking at natural gas and I'm looking at a long chart. I'm gonna look at a 20-year chart here. What seems to happen is that these big spikes come along about every 2 to 3 years, and then there's devastation after. As I said before, everybody goes out, drills like crazy, oversupply is being put on the market, and then there's devastation after that until some point when that surplus is used up, and then it spikes again. There seems to be no particular foresight in this industry. It just seems to be either boom or bust, which is, well, seems to be the norm these days. Gasoline seems to have double topped here and has been declining since, which again is a very um, interesting um, take. Now my oil short gas long relationship, the relationship has dropped a little bit. This was the point when I said I'm going to go short oil and long gas, and the relationship has come a little more in line, but certainly not anywhere close to where it should be. It is still too expensive at this point. Looking at the New York stock exchange, we continue having these non-technical non-confirmations on the RSI, but we do have higher high price wise, so it's not still not particularly conclusive. The MACD is declining slowly, but the stochastic is actually making a higher high, or at least an as high high here. And the OBV is again inconclusive. It's going sideways right now. Looking at the S&P, same basic idea. MACD is going down, stochastics are strong, and the OBV is still running very strong. So at this point, there continues to be nothing that says this market is going down in any particular hurry. I continue being on the bearish side, but I do hold some longs as well, so I continue being hedged, and I am very happy there until the market finally makes its mind up where it wants to go. September/October are usually bad months, and in my opinion, especially with the S&P 500's PE ratio being as high as it is, it dropped slightly back from the 143 to 132, I believe, or something like that. So it dropped slightly back, still entirely overpriced for the economic conditions that are actually out there, which are a lot worse than CNBC might make you believe. We're nowhere close to an economic bottom quite yet. More people will lose their jobs and more houses will be foreclosed upon. We have not reached a bottom in the economy, and I believe we have not reached a bottom, or at least the previous bottom will be retested in the S&P 500, but that's just my bet, and I'm certainly in the minority on that view. So we shall see. I put my money where my mouth is, and I am okay if I'm wrong. So that's what I have for today. I'm just basically holding my positions and waiting for what I believe to be the inevitable downturn and possible retest. So all the best, good luck next week, and hope you make lots of money. Bye.